Here are 4 quick tips for you to consider when investing in exchange-traded funds, which are commonly known as ETFs. Whether you're an experienced investor or just starting your investing journey, ETFs can be a convenient, simple, cost-effective and flexible investment option for your portfolio. 4 things to keep in mind once you've conducted your research and decided on which fund to invest in. Tip number 1, use a limit order. When you place a buy or sell order, it's recommended that you use a limit order instead of a market order. This will ensure your order is filled at the price you are willing to pay. Because underlying markets are moving throughout the trading day, prices can change very quickly, especially in volatile markets. When the price changes, the bid or offer price changes with it. By using a market order, you risk getting filled at the price that the bid offer has changed to, and this may be higher than you wish to pay. Using limit orders can prevent this from happening. Tip number 2, always refer to the NAV when placing an order. One of the greatest benefits of ETFs is their transparency. By using the NAV, or net asset value, investors can get an estimate of the fair value of the fund throughout the trading day. Use the NAV to get an accurate sense of the value of your investment and make better purchase or sale decisions. Tip number 3, remember that on-screen trading volume is not an indicator of liquidity. ETFs are open-ended, meaning that units can be created and redeemed by the fund manager. This means an ETF can continuously issue new units as more investors wish to buy. If an ETF hasn't traded much during the day, but you want to purchase or sell units, you can still do so, which is a fundamental difference, an advantage that ETFs have compared to individual shares or closed-ended funds like LICs. Tip number 4, if possible, avoid trading in the first and last 10 minutes of the trading day. Consider trading an ETF when the market has settled down. This is generally 10 minutes after the market's opened to 10 minutes before they close. When the market is opening and closing, there can be less information available to value certain shares, or there can be more volatility in share prices. In this situation, the market maker spreads may be wider and the fund's NAV may move significantly within a minute or 2. ETFs are simple, cost-effective and versatile investment options that can help you build a diversified portfolio. Learn more about our range of funds at betashares.com.au.